Welcome back, investors, to Ticker Time News. I'm Adam, and thank you for joining me for the After Hours show. Whoa, a little feedback there, a little too high. All right, took care of that. Hopefully, that's our first and last bug for today. Thank you again for joining me. And remember, I've got a lot of things to talk about and a lot of things to go over in the markets and different stocks, earnings, and so forth. Crypto, Metaverse talk. But remember, the most important thing about this show is you, the audience, and answering your questions. So if you do have a question, leave the ticker symbol and your question in the comments, and I will stop what I'm doing and go over your question. Look at the company, the financials, the stock chart for stock, any patterns on the chart. So you can feel comfortable knowing you have the best information to make the best investment decisions. So thank you again for joining me, and make sure to leave that ticker symbol in question in the comments, and we will go over it live during the show. We also have catalysts to talk about for next week as well. And also a couple things to point out. On Sunday afternoons, I will be posting a video every Sunday afternoon, and it will have a different catalyst for the upcoming week. So we'll talk about a few of those during the live stream today. But I think a lot of people will be watching and waiting for this Sunday afternoon video to drop to explore not just what stocks could move up for the upcoming week, but what stocks may move down for the upcoming week are all in that Sunday afternoon video. I'll pick a couple for each day of the week, so you have something that you can trade around or invest in, or stay away from and be careful and maybe take some early profits before it potentially drops. Now, I won't be right every time. Nobody is, but I'll do the best that I can on those Catalyst Watch videos on Sunday afternoon. Also, with all the talk of the Metaverse, I'm going to talk a little bit about the Metaverse today, but I do have a video out. It's solely about the Metaverse. It explains what the Metaverse is. It talks about companies that are working in the Metaverse space that you can invest in right now. I think the Metaverse is going to be huge. I really do. I think it's the next iteration of the internet. Wow, it's so cool watching the different videos that are actually taken from the Metaverse. I mean, it's like a whole different world. I mean, you can go to Mars if you want to in the Metaverse with your best friend. You guys can go to Mars for the weekend without leaving your living room. It's so cool, and I'll talk about it a little bit more, but I do have a dedicated video on it that you can watch. The link is in the description of this video, so if you want to watch that after the live stream, more than welcome to go watch that when you have some time. Okay, I want to jump in and talk about the markets here. Oh, I just lost my place there. Okay. I don't want any other bells to go off while we're talking about anything else today. So we got markets. EVs are totally electrifying this space and going off, with Tesla hitting a new all-time high today. We're going to look at that, and of course the catalyst. So trick or treat, it's the last trading day, or it was the last trading day of October. And next begins the best trading months of the year. If you didn't know already, November, December, and January historically are the best trading months of the year. And I'm looking forward to a year-end rally in stocks and crypto. I know I keep talking about it in every live stream, but it is true. And I have some evidence to back that up as well. All three indexes closed at record highs today. Now, you may be saying record highs. Well, wouldn't that then put the market on wobbly legs and it could have a nice pullback or a correction? Yeah, a healthy pullback isn't bad, and it could happen. It's not gonna, the market doesn't hit all-time high after all-time high after all-time high every single day. It does have healthy pullbacks, and they're okay. That's when we can buy the dip, right? If I pull up the S&P 500 index, I use TradingView for all of my charting. There's also a link in the description if you would like to use TradingView. They do offer a free account. But I use ticker symbol SPX to chart out the S&P 500 in TradingView. And you can see this brilliant rise up and to the right. That's what we love to see on our trading on the screen. And it's been using the blue line here going diagonally along with it. That's the 50-day moving average. And whenever a market is using that as support and bounces off of it and continues to rise, that's a very healthy market and a very bullish market. When it dips below the 50-day moving average, and I've talked about this before on the live streams, that's when you get into a bullish scenario with the market. So it did dip there the end of September, in the beginning of October, but it has since pulled back above that and has been rallying on. So the Dow Jones closed up 0.68% to 35,730. The S&P 500 was up nearly 1% to 4596. The NASDAQ was up 1.39% to 15,448. And gold was actually up a fraction of a percent to 1799. Let's go 1800 for gold. It's almost there. It's been creeping up all week. And crude oil is at $82 a barrel, so it's gone down a couple bucks this week. And Bitcoin is at 60,695 per coin right now. We'll also dive into Bitcoin in just a little bit. But on the day, Bitcoin is up 3.24%. Now, with the indices going into all-time high, S&P 500 and NASDAQ also booked their best month since October 2020. My bad. I said the wrong month. We're out of October. Their best month since November of 2020. November of 2020. Best month since then for the S&P 500 and for the NASDAQ. And again, I'm looking for a year-end rally, very similar to what we saw at the end of 2020 and then the beginning of 2021. I could see a very similar outcome for the rest of this year and the first quarter of 2022 going forward for us. So that does look good. Now, these upbeat markets are running, especially the NASDAQ, with the report or disappointing report from Amazon and from Apple yesterday. They didn't look too good. However, about half of the S&P 500 have reported quarterly results, and more than 80% of them beat earnings estimates from Wall Street analysts. Now, that is what's helping to move the market up and to the right on the chart, giving us record high after record high. Now, this advance is the fourth consecutive week, so it's looking good. The markets are, like I said earlier, some may say with the new all-time highs, the market's on wobbly legs. Okay, a healthy pullback is not bad. If you look at the chart right here, all the way up from the bottom left all the way to the bottom right, before it dipped down below that blue line, there's checks all the way up. So the market can pull back for a couple days and you're still in a bull run and a rally. It's okay to have red days. That's when we buy companies. We don't buy them when they're at all-time highs. We buy them when they're down 5 or 10 or 15, 20%, right? That's the best time to buy, not at all-time highs. So you can see this on the S&P 500. It dipped back to its 50-day average so many times over the past year and a half right here. So a healthy pullback is okay, and a little consolidation is okay. It's nothing to get worried about. And you know, it can get back to year-to-date highs without any trouble. So keep that in mind. Nevertheless, the major indices, they are their underlying sectors are trading above their 50-day moving average. So it's not just the S&P 500, but there are others also above the 50-day moving average, which puts the whole market into a bullish context. And the year-end rally does remain intact that I continue to talk about. Relative strength among areas like energy, lithium, uranium, broker-dealers, transportation, electric vehicles, crypto blockchain, cloud computing, software, solar, and retail and discretionary spending should be monitored for the best opportunities as we move into November next week. All right, let me plug in Bitcoin. On TradingView, you do BTC USD, and you have a couple of options for who you would like to use. I'm going to use Coinbase's data and take a look at Bitcoin. So we're up to 62,318 right now. This is a daily chart. I should have mentioned that when we were looking at the SPX or the S&P 500. But this is a daily chart for Bitcoin. And you can see a nice green candle for today. It was hanging around this trend line for a couple of days, not being able to maintain above it when it did break through, because the candle wick does go up above it, but the candlestick itself is below it. Today, that's a different case. It has broken through and it is holding above that line, and that trend line is at $61,300. So as long as Bitcoin can stay above that, then we are good. And I believe if you follow Plan B, who has the stock to flow model on Bitcoin, I believe he's predicting a $63,000 per Bitcoin close for the month of October. And if he can do that, or if his model can predict that, that will be the third month in a row that he has gotten his predictions correct. He's predicted that November will actually end, I believe, 90-some thousand per coin, and December $135,000 per coin. It's what his stock to flow model is predicting. You can find him on Twitter. Just type in Plan B and you can get to him no problem. You can look at the different charts he puts up on Bitcoin, but he does a really good job, and it's someone that I like to follow on social media, and especially on Twitter. He does a lot of podcasts, so I'm giving a shout out to Plan B because he does such a great job. And we're really close to that $63,000 per coin right now, and that would be great to see. I hope his model does work out. But you can see there's this orange dotted line. I know it might be kind of hard to see on your screen, but this is right here at Bitcoin's all-time high. I have it set for $67,000. It's an alert that goes out. So once Bitcoin breaks that, then it's setting a brand new all-time high. My prediction for Bitcoin is $75,000 per Bitcoin by the end of the year. I know there are a ton of predictions out there for Bitcoin and other cryptocurrencies, and I hear a lot of 100,000 per year for Bitcoin by year's end. We'll have to see. I am comfortable with saying 75,000. I can see it. It's possible in my mind. And if you look at the trading channels for Bitcoin, after this trend line that it has broken right now, the next trend line for Bitcoin would be up here around $75,000. So that's why I'm calling it there. I think it can get to it. It'll take a lot of momentum to break above that. It's possible, though. I mean, remember the days when Bitcoin was down at $3,000? $62,300 was totally out of the realm back then, and now it is reality. So it's interesting to watch it move along and continue to grow and pick up more adoption along the way. So just keep your eye out for Bitcoin. It's above this. It needs to close, and that would be on Sunday. So Sunday night, it needs to close out the month at $63,000 a coin, and the stock to flow model will be intact for 3 months in a row of predictions. So let's go for Bitcoin to 63 by the end of the year. Okay, there's a company I want to talk about right quick. It's Western Digital. Ticker symbol is WDC. Okay, let's go a little quick. There we go. Okay, Western Digital. They were down 8.7% today. They were actually down a little bit more than that earlier today. I think down over 10% at one point. But there's a reason I want to talk about Western Digital, because it connects with some other areas here. So first off, let's look at the chart structure and what's happening. So right off the bat, we can see that there was a huge buy the dip on Western Digital today. When it reported earnings, they were not very good. I'll put it that way, even though they did beat. There was this gap down right here. Again, this is a daily chart for the candlesticks. Each one represents one day. So there was a giant gap right here. It fell all the way down to around $49, $50 area, and it has bounced up about $2.30 from there today. So a nice bounce from its dip. And if you can look about the middle of your screen, a little to the left, that would be June 4th. That was the last time it reached a peak, and it has been in a downtrend ever since. It's underneath its 50-day moving average, which is the blue line. Now remember, I talked earlier about the S&P 500 and the 50-day moving average. When a company is above the 50-day moving average, that is a bullish sign. When the company is below their 50-day moving average, that is a bearish sign. So always, that's the first thing that you can see on a chart, is that 50-day moving average and what's happening to them. Second, they're below their 200-day moving average, which is really bearish. That's this yellow line that you see running across the screen here. So two very bearish signals for this company. But there was a buy the dip today. Why would there be buy a dip on a company that's in a bearish technical structure? Well, Western Digital is, oh my goodness, I've lost my train of thought. Second blooper for today's live stream. Sorry about that. Okay, Western Digital. All right. They had their Q1 fiscal year 22 results last night. The main takeaway is that this quarter's results were decent, but not great. So if I pull this up right here, you can see they beat EPS, or earnings per share, by 1.7%. That's not a huge beat, but it is a beat. But they missed on revenue by a fraction of the percent, which is not really a miss. It's more, in technical terms, in line. That's how they would frame it. So $5 billion in revenue for Western Digital. Now, the concerns today are largely surrounding the company's surprisingly weak guidance. This is something that can happen to companies who beat on earnings, but then they report soft or weak expectations for the next quarter. So what's going to happen next quarter? Is next quarter going to be good or bad? The company is actually obligated to tell the investor what they think. And if they think it's going to be bad, they tell the investor. And then investors, well, they can make their own decision on whether they want to stay in the company or get out of the company, or buy the dip in the company, like many did today in Western Digital. Now, the next quarter, resulting from, you guessed it, supply chain issues. This guidance was a surprise because Western Digital's main rival, Seagate, ticker symbol STX, reported last week, and upside guidance on their EPS and revenue. Bottom line, this was a rough report for Western Digital, mostly due to its guidance. And this is a prime example in why I wanted to talk about them, because you can see when you're on a charting like trading view here, you look down at the bottom and you see this green house with an E in it. That looks like, oh, they did good on earnings. They beat earnings. Oh, look at this green volume candle. There must have been a lot of buying. But they gapped down in after hours or pre-hours or pre-market. And then there was the buy the dip. So you might think, oh, it's good for the company. There were people buying the dip. Well, why was there a big gap down in the first place? And it's all because of guidance. And this is a prime example of why guidance is so important and why you need to pay attention to guidance whenever a company is reporting its earnings. What do they think the next quarter is going to look like? And most long-term investors don't really care about that to a certain extent. They don't care about how the company is moving day to day or how the company is moving even week to week or month to month. They're looking at how is the company moving over 6 months, 12 months, 36 months, 5 years. They're long-term investors. They want to look at the big horizon. But you have your traders in the market who are only looking at short-term gains. So there's this dynamic of long-term and short-term thinking in the market, and it can play a big role in how a stock moves. So guidance is just one of those keys to the puzzle, one of the pieces to the puzzle that you can use to become a better investor. And that's all this channel is for, just to help you to become a better investor. Now, the next company I want to look at is US Steel. Now, steel is in hot demand right now. Their ticker symbol is X, just the letter X, just like Ford is just the letter F. Now, they had an interesting result here today. A nice gap up. You can see the hole here, but then not a lot of movement throughout the day. They were up 12.8%, but that all happened first thing this morning. It wasn't a gradual increase. Now, they were down below their 50-day moving average using their 200-day moving average as support. So they're kind of trapped right in between there, moving sideways for the past few days. But nice gap up today, nice gain, big volume for today. And if we pull up their earnings right here, they beat EPS by 11.5%, and they beat revenue by 3%. They came in with $5.9 billion in revenue and earnings or EPS of $5.36. Now, US Steel, there was little doubt that the company would post strong results and provide a bullish outlook. Although prices have recently cooled off from the recent high levels seen in a few months ago for steel, steel is still up significantly compared to last year. So even though it's down from the highs at the beginning of the year, it's down from last year. It's up from last year. Down from the beginning of this year, getting tongue twisted. Down from the beginning of this year, up from last year. Just slow down, take a breath. Okay. The very favorable environment was on display last week when fellow steel producer Steel Dynamics, ticker symbol STLD, reported solid quarterly results while noting that order activity continues to be robust. Against these elevated expectations, US Steel didn't disappoint, blowing out analyst EPS, you can see here, by 11.5% and revenue of $5.9 billion. So they had an incredible quarter, and it was the company was under a lot of pressure to perform on their earnings today because of their competitor's nice beat as well. And this is something I've talked about in prior live streams. You can use companies that are competitors to compare how one may perform over the other when you are investing around earnings. If you use the PEG investment strategy that we went through in detail yesterday around earnings, then when one company reports good earnings, then when the next company is on deck to report, you can go into that and you could make a nice 12.8% if you would have bet on United Steel today based off of the PEG strategy that I taught in yesterday's live stream. Using it in this scenario would have been a very nice play. Now, the company's upward revised guidance of $2 billion from mid-September, the impact of higher steel prices immediately jumps off the page as an 86% year-over-year jump in average realized price per ton of flat-rolled products generated earnings of $1 billion for that segment of United Steel. Now, in the year ago period, so last year, same time, flat rolled steel, it was a $159 million loss for United Steel. So that just goes to show how the prices of steel have gone up so much that they've boosted their $1 million loss into a $1 billion gain, at least on revenue and sales. So that's an interesting dynamic to look at. Now, overall, the outlook for U.S. steel is bright. I think that's good. It's supported by healthy demand from the automotive, construction, and industrial markets. At the same time, steel stockpiles remain low due to industry-wide production cutbacks that intensified during the pandemic. This recipe, I should say, should continue to foster solid results for U.S. steel heading into 2022. Okay, let's look at somebody fun, all right? How about we go to Tesla? And then we'll look at Lucid too, because they had something happen big for them too. So Tesla, ticker symbol TSLA. Now, Tesla, they hit a new record, fresh all-time high today of $1,115.21. It's amazing. The company was up another 3.4% today. This has been a rocket ship since earnings. I hope all of you are riding along with me on Tesla. I'm not sure when the pullback happens, but if you look at this chart is screaming pullback. It's, let me just measure this. Okay, there's a purple line right here. That's the 21-day moving average. Right now, the price is 26% ahead above of its 21-day moving average. You hardly see that. You really only see that on like the DWAC companies or the SPAC, DWAC, the Donald Trump SPAC, where it shot up 1,300% in 2 days and then fell right back down to earth. So when you see this structure on the chart, it's just screaming to you there needs to be a pullback. There's going to be a pullback. It's on wobbly legs, kind of like the S&P 500 if you look at that over the past several months. So Tesla, it is a rocket ship right now. There's nothing negative to say about the company. They're firing on almost all cylinders as soon as they get all their manufacturing plants opened up, their gigafactories. So when that happens, man, they are going to be on fire, just completely efficient and just using their money in the best possible way. I sold too much Tesla last week. I'm hoping for a dip so I can rebuy. Yes, I am too, quite frankly. I wish I had more. I do believe there will be a pullback because a company cannot contain this type of move for a sustained period of time. Plus, pullbacks are healthy. It's when we can buy the dip. So I will keep my eye on it closely for a pullback because, again, I'm sound like a broken record here, but I do believe the company is due for one just because of how much it has gone up. Okay, let's look at Lucid Motors real quick. The big story, ticker symbol LCID. The big news on Lucid is they are supposed to officially deliver their first production vehicle this weekend. So that's why the stock has been on a rampage. And this is also a good exercise right here to do. I want to show you two things here. We have you could call this either a symmetrical triangle. There's two chart patterns here. There's more in the background, but there's two up front. In the middle of your screen, we've got, you could call it a symmetrical triangle, or you could call it a falling wedge. And then all the way to the right, we have a symmetrical triangle. Now, both of these can produce big moves. And they're one of my favorite chart setups whenever I can find them on a chart, because they usually produce big moves. You just have to be ready for it. Now, Lucid, on the setup here in the middle of your screen, back here on September 1st, the end of August, their lockup period for PIPE investors expired, and it allowed them to sell their shares basically. And there was like a flash crash for Lucid right here. The morning of September 1st, it just fell like a rock. Scared a lot of paper handlers out of the market, out of Lucid. I bought. This was a big buying signal for me because I knew the company had catalyst going forward. And on this day, this is when they announced that they were going to have their production preview. So big news was PIPE investors could sell, but there was basically like an investor day coming up. That's what their production preview event was all about. So something to have the stock sell off because a bunch of big institutions could sell a bunch of shares, but then big news about an event coming up, which led a lot of people to buy the dip. And boy, oh boy, was it a great dip to buy. If we measure this right here from the dip, I'm not going to get exactly. I'm going to put it right on $16. And if we measure to the breakout point right here of this symmetrical triangle or falling wedge, it could fall into either one. That was a 26% gain. Well, if you held on to that and then ran with the rally, it went all the way up to a point of a 76% gain. If you weren't happy with 76% and you kept holding on because you knew deliveries were coming up and you were betting on that to be big, well, Lucid broke out right here on October 22nd, and it ran all the way up to, what is this, $41.60, and that happened today. This morning, it ran up, it broke $40, and then it sold off. It's like everybody had a stop loss or exit point at $40 because there was big selling pressure at that price point. But if you would have held on till then, from that dip, that would have been September 1st to, let's call it November 1st, a nice 160% gain. Not bad for a month's work. So this is another lesson that we can learn. Everything is a lesson in the stock market that we can learn to use going forward. Symmetrical triangles are usually positive especially when there is a rally leading into it. So if we look at this symmetrical triangle here, there was a rally leading into it, a burst off of another symmetrical triangle. And this middle symmetrical triangle, well, it had a rally into it also, which would be right about the middle of your screen right here. There we go. So there was this rally that led into this other symmetrical triangle or falling wedge. If we go back even further, we had another, this was on the verge of a falling wedge or a symmetrical triangle here, but this one came from a big drop and a downtrend and then a reversal. That's why I would kind of lean this one to be a falling wedge instead of a symmetrical triangle, because it came and it started from a downtrend. But that also led to a nice boost, although it wasn't as straight up as the last two that we have. So this is just an exercise here of chart patterns and how they can work and how they can help you predict what may occur with a stock. Now, one other lesson I want to talk about here is this dip that occurred in this symmetrical triangle or falling wedge pattern, whatever you would like to look at it as. This dip right here, when it closed that day, it was outside of this bottom support level. And you would think to yourself, okay, since it has fallen out of this technical structure, then that technical structure has now fallen apart. It's broken apart. It can't be used anymore. When a company rubber bands and snaps back, it took Lucid 2 days to get back above this support line. When it happens that quickly, I would say there was a kink in the matrix. Something that happens this quickly, I wouldn't throw the chart pattern out of the window and start from scratch. I would just say it was a big sell the news, buy the news type of day for Lucid, a very unique situation. So that's why it's not just important to pay attention to chart patterns, but pay attention to news that's coming out about a company as well. Now, even though Lucid did pull back some today from its $41 high, it did close the day up another 4.2%. So it's on a nice run, just like Tesla is. All right, another company in the EV space, EV charger. I'm going to look at ChargePoint, ticker symbol CHPT. We did a video on ChargePoint a while ago, kind of laying out an investment thesis. But ChargePoint has also been on a nice run from another technical pattern on the chart here. Let me just get this out of the way. We don't need to bother with that. We just want to look at the chart pattern. Now, ChargePoint was up another 2.5% today. In the EV space, I believe, especially for the more well-known companies in the space, Tesla is like a, I don't know, a North Star. When Tesla is on a run, it can pull the whole EV market with it. And I think that's why you see a lot of the EV and EV related companies having a nice run, and it has a lot to do with Tesla. Now, of course, that's not discounting the excellence that these individual companies are doing. I don't want to say that. That's not the point I'm trying to get across. Okay, so we had ourselves a falling wedge for ChargePoint here, and then it broke out, and almost to our prediction, this blue arrow wiggly line here, that was my prediction on where I thought it would go, but it ended up being more of a straight diagonal line with less of a pullback. after its breakout. And let's see, what is that percentage from the breakout point, which is right inside this circle on the top purple line, up to where it is today. That is a 29% gain on ChargePoint. We did post this chart on Twitter the day before it broke out, talking about this chart structure or technical structure on the chart. I believe I posted it on StockTwits also. So you can hold me accountable for when I get things right, and you can hold me accountable for when I get things wrong. All right? Because I don't always get everything right, but when I do, it's good for all of us. If I get something wrong, hold me accountable. I want you to do that, most certainly. I don't want to be some shady YouTuber who says, oh, I'm right all the time. Nobody's right all the time, and it's okay as long as we learn from our mistakes. All right, so that's ChargePoint. And remember, if you have any companies you want me to talk about, just leave the ticker symbol and the question in the comments, and I am more than happy to go over it with you. Okay, let's see. From ChargePoint, I had another company I wanted to go look at real quick. Let's see here. Oh, I can't seem to find it. There, I'm looking at the wrong place. There it is. Okay. All right. Arcimoto. The only reason I want to look at Arcimoto is because they were up 7% today. And I just wanted to check here real quick. I haven't looked yet. Let's see. Arcimoto to showcase electric vehicles at Southeastern Clean Cities meeting. Shares higher. Arcimoto. Okay, so Arcimoto is going to demonstrate some of their products. Okay. Arcimoto makes a pretty cool little three-wheeler type thing. It's a neat little vehicle. But they were up 7% today. And again, they're also in the EV market, even though it's not a EV vehicle. And they've been pretty flat on the chart in a downtrend. And you can see this real quick. What do we see on the chart? We see the 50-day moving average and the 200-day moving average. And the company is well below that. It's using its 21-day moving average as kind of resistance for the stock. So that's something that can catch our eye real quick to give us a technical structure on the company. All right, QS, QuantumScape, ticker symbol QS. QuantumScape has been up recently. All right, QuantumScape, we're looking at it on a daily chart. It had its big high at the beginning of the year and has since cooled off. Let's see, that high was hit on December 22nd and then fell off. Okay. It's been trading flat most of 2021, especially over the summer, but now we're having a run. Okay, one thing that's really good about QuantumScape right now is there was this reversal back here on September 24th where it pulled above its 50-day moving average. And then here on October 6th, it used it as support. So it bounced off its 50-day moving average. That is a bullish technical structure. Now, the next big, I would say, resistance for QuantumScape, just technical only, is the 200-day moving average. And I'm using a simple 200-day moving average. There was a question ago about what moving averages I'm using, and it's just a simple moving average, nothing complex with other mathematical equations built into it. So it's just a simple 200-day moving average. that'll be the next big resistance, but that is still a ways away up here. Right now it's sitting at $33.62, so it's got a little bit to go before it gets there. Okay, let's go real quick into these fundamentals. I know it's not profitable yet. Wow, the indicator here says a strong buy. That had to have been more for this morning, not with its big run today. So up 13%. Let's see here. QuantumScape announces third quarter financial results and post shareholder letter to IR website. Let's see here. No, I don't want to look at that. Where's the... Okay, let's see here. Hold on. QS. Okay, here we go. No, NEO has not been performing very well. NEO hasn't been up nearly as much. Ford has actually been performing better than NEO recently. Actually, I think over the past month, maybe 3 months, Ford has actually done better than NEO. Okay, let's see here. QuantumScape missed EPS by 3 cents. Okay, but let's see. All right, I'll get into NEO in just a minute. Honestly, I don't follow NEO as much as I do other EV products. Just because I kind of stay away from the China stocks, because I don't want an Alibaba type of deal to come mess up with other companies that are based in China like NEO is. All right, let's see. QuantumScape is one of the biggest gainers Friday. Yep. All right. They announced that the EV battery developer made in connection with its Q3 earnings report. A day after its Tuesday earnings, the company reported that third-party testing by Mobile Power Solutions showed that its solid-state batteries should be effective in the real world and can operate with minimal degeneration. Research suggests that solid-state batteries would be lighter, offer greater range, and charge faster than the lithium-ion batteries used in electric vehicles today. The successful test is a major step towards QuantumScape's goal of commercial production. Still, the company has yet to announce when it expects the sales to begin. Volkswagen is currently the largest shareholder of QuantumScape after investing $100 million in the company in 2018. QuantumScape also updated investors on a potential OEM partnership in addition to Volkswagen. The possible near-term economic value of the deal is in the high single-digit millions, but if the company can deliver on technical milestones, the deal would have even larger long-term upside. So that's why QuantumScape moves so much today. A third party tested the solid state battery and said it would be effective in the real world, meaning what they're working on could theoretically, I guess, be used in the real world in real cars, and all the benefits that QuantumScape has stated would or could be a reality. It's interesting that Volkswagen, being the biggest shareholder, and the reason I say that is I know it said in 2018 is when Volkswagen invested that $100 million in QuantumScape, but the CEO of Volkswagen, I believe it's Diess, Herbert Diess, I think it is. I could be getting that a little bit wrong, but he had a all executive meeting, basically an everyone on board meeting, and he is fighting tooth and nail to take Volkswagen from a legacy automaker to an electric vehicle manufacturer. They want to be Tesla. And at this all hands on deck meeting, you may have heard about it, Elon Musk was the main speaker, the main attraction. And they brought Elon in digitally, of course, on a like a Zoom call or something, and had Elon talk to all the managers at Volkswagen. And Herbert Diess is trying to get the company to turn and do an about face and a pivot to EVs. The problem is Volkswagen is such a big company. When you think of one of the big container ships when they're out in the ocean, how fast can a big cargo ship turn around, do a U-turn? It takes it a long time to make that U-turn. That's where I see like Volkswagen right now. It's like that big container ship. It's trying to make a U-turn to get into EVs and to get out of the fossil fuel ICE vehicle, but it's going to take a long time. And a lot of the people in the company, they just, meh, EV, why change what we're doing? What we're doing works. We sell a bunch of vehicles. Well, they have to change to keep up with where we're going. But that's kind of where I see them. And Tesla's like this little sports boat out there going left and right and just turning sharply and can maneuver however it wants to. It's not this big container ship that is kind of stuck trying to make this big turn. So that's an analogy I like to use for these big companies like Volkswagen. But Volkswagen, I think, is one of the companies who is honestly in their DNA trying to move and change the structure of the company to be more EV oriented and less internal combustion engine oriented. And Herbert Diess is fighting really hard to get there. And they're I guess almost ownership here, the partnership with QuantumScape, it looks like it's going to go a long way for them, and that's going to be a really, really good thing for them. Okay, you are welcome. Yeah, it's excellent news for QuantumScape. Okay, NIO, it makes a lot of cars. Do you think there could be value here when, if China FUD subsides? How does it look short term? All right, so let's plug in NIO on the chart. Just, oh, that wasn't NIO. What in the world? Here, I hit NE instead of the I. All right. Okay, technically on the chart for NIO, they're in a squeeze. Okay, not a short squeeze. They're in a moving average squeeze. Technically, when you see a company All right, we've got the yellow line going up top. That's the 200-day moving average. And then underneath the most recent days, again, this is a one-day chart, we have the blue line, which is the 50-day moving average. Right now, it's sandwiched between those two averages, which should provide some stability for the stock as it moves forward, because it's like sandwiched between those two moving averages. So that's a positive in a way. However, right now, with the distance they are apart from each other, that's a 13% difference between them. So the stock could swing 6% from where it is now, and touch or tap the 50-day moving average before bouncing. It could swing up 6% and hit resistance. That's what it looks like technically. So it's probably going to move sideways here, unless there's some other news that comes out. I do believe the FUD out of China is playing a big part in why NEO is not doing such a good job. Now, here's something really easy to do if you want to compare companies. Just go to google.com/finance, and they have this really cool tool, really easy to use, compare. So I put Tesla in, that's the chart here, that's Tesla. And I'm gonna click compare to, and then I'm gonna put NEO in there, N-I-O, not the E. Put NEO in there, and let's just put Lucid in there, LCID, just to compare how these companies are doing together. And let's just throw Legacy, let's throw Ford, because I did mention them. Ford in there. All right, so we got Tesla, NEO, Lucid, and Ford all on the chart here. So this is a one-day chart. Everybody was kind of flat and sideways today after, of course, Lucid here is the big peak and pullback. Let's go to a 6-month view. Okay, so we got the 4 different colors here. They're all moving along together, but right here, looks like September 22, September 21 is where NEO really left the pack, or the pack left NEO behind, where Lucid and Ford, or Ford and Tesla. Let me get my colors straight. Ford and Tesla, they both kind of moved up, and then Lucid was kind of moving there with them, but a little more volatility until today, of course, and Lucid shot up there. But the yellow line, you can see here how NEO has just been left behind all the others, including a legacy Ford. So I do believe the Chinese FUD, fear, uncertainty, and doubt, is causing a lot of damage to a bunch of Chinese stocks, because the way China is running things right now, I mean, they can just come out with an iron fist and, cause a Alibaba situation, and everything could just come crashing down. And there's a lot of uncertainty with the Evergrande situation. China wants the CEO of Evergrande to pay the company's debt. They're doing some very authoritarian stuff in China right now, and it does have people nervous. If that did subside, well, yeah, I think NEO would perform better. Looking at 6 months here, we have Tesla up 57%, Lucid up 75%, Ford up 48%, while NEO is down 1.08% over that same 6-month period. But again, I haven't dug into NEO like I have Tesla or Lucid or some of the other ones in the EV space. just because I do kind of stay back from the China stuff because of that fear, uncertainty, and doubt. Okay, let's see. Can you please look at support and demand zone for MARA for a span of Q4 21 and Q1 22? All right, you are welcome. And I'm glad to see you back. I've missed you the past couple of days. Okay. We got MARA. Let me go back to Trading View. MARA. Oh, Marathon Digital Holdings. Okay. Let me just show you Marathon Digital Holdings. Up 3.6% today. Okay. 767% miss on their last earnings, but they've got earnings in 17 days. Prior to that, they beat. Okay, let's see. So if we look at a loss of 10 cents in Q4 2020, a profit of 87 cents. This is EPS, earnings per share, in Q1 21, a loss of $1.09. Okay. Let's pull them up. ARA. All right, I was just letting this load here for them. Let's see here. Marathon Digital. All right. Okay, let's go to financials over here. Okay, so we got the daily chart for them here. Let's look at this. All right, I bet you, let me go back. I want to see something here. I want to overlay. Is this real? Let me clear these out. You can go to Google and do this too with that compare feature. But I'm going to change what I'm looking at. Marathon Digital. Okay. Revenues. All right. And then we put Bitcoin in. All right. This is the past 1 month view for Marathon Digital and Bitcoin. Look at how correlated they are. When one moves, the other moves. Let's go to 6 months out. See if correlation is still intact. Let's go year to date. Year to date, it gets a little different, where Marathon Digital's got more volatility than Bitcoin. That's saying something there. Marathon Digital year to date is up 374%, while Bitcoin is up 112%, according to Google statistics here. Look at that. When Bitcoin was reaching its all-time high back here. So was Marathon Digital. I just think there's a real strong correlation with Bitcoin and how Bitcoin moves. When Bitcoin goes up, so does it. And all right, why would more people possibly invest with Marathon Digital than invest strictly in going and buying Bitcoin? That's a question to think about for why there's a strong correlation to how they move, even though you can obviously see Marathon Digital does get more spicy at certain times, especially at the beginning of this year. But from about May, the end of May to the rest to now, there's been a very strong correlation in the ups and downs of Bitcoin to the ups and downs of Marathon Digital. But a question to ask is, why would somebody maybe invest in Marathon Digital but not invest directly in Bitcoin? And I think the answer to that question comes from part of the question directly. A lot of big investors, they talk about Bitcoin and they talk about me, Kevin, had an interview a few days ago with Mr. Wonderful from Shark Tank. And he talks about his compliance department won't let him invest directly into cryptocurrency, or a small, very small percent of his portfolio. But the compliance department will let him invest in a company like Marathon Digital, which is a indirect way to invest in Bitcoin without the liability problems that bigger investors may face with their compliance departments and legal departments than investing directly in Bitcoin. So it looks like to me that would be a good reason for why Marathon Digital has been moving higher in correlation, again, since about the end of May, beginning of June. It moves in bigger swaths than Bitcoin. So when Bitcoin goes up, Marathon Digital percentage-wise will go up higher. But when Bitcoin falls, then Marathon Digital will fall, but it'll fall a little harder, because you do have those type of investors who are indirectly investing in Bitcoin by investing in Marathon Digital. There were a lot of crypto companies that shot up today too. But let's see here. Since its correlation to Bitcoin, it is using its 200-day moving average as support ever since, again, this is about the middle to end of May. It has been doing that. Before, so it was a lot more choppy, and probably, a lot of retail investors getting in and FOMOing to the top of this thing. My reason is I have good control with outs and calls on my position in stock investment, not like, yeah, good point. Very good point. With that correlation, though, and Bitcoin potentially running for the rest of this year, with, of course, some healthy pullbacks in between, Marathon Digital has got potential to run. If we actually go look at other crypto-related companies, there were some big movers. Ditgital was moved incredibly well today. Okay, why aren't you loading? There we go. Ditgital was up 41% today. It's down 17.7% in after hours, but they just, boom, shot right up. And it was all at once. It was all right at the end of the day. That 41.7% up and then 17.7% down, all right at closing. All right, where's the other crypto? Yeah, puts and calls. I gotcha. I understand. No. Oh, there we go. Blockchain. That's what I have it under. So, yeah, wow. Ditgital. All this afternoon, right at closing, up and down. Hut 8 Mining did good today. I'm invested in Hut 8 Mining. I think they do a really good job. They were up 9.4 today. Marathon Digital 3.6. Argo Blockchain 3.6. Stronghold Digital 2.2. Grayscale Bitcoin Trust 2%. That Grayscale Bitcoin Trust, I've read in the news that they want to change it over to a full one-to-one Bitcoin ETF. But I don't know that the SEC is going to go with a one-to-one Bitcoin ETF anytime soon. Concord was up 1.1. Concord, it's a SPAC for Circle. Circle wants to be the first bank chartered crypto bank, I guess you would say. And then we have Coinbase down, oh no, up 0, flat. Coinbase was flat, 0.09%. Riot Blockchain down 1.1, Bitfarms down 3.2, Hive down 4%. So that's the blockchains and cryptos. Let me go into crypto here. Let's see, BAT was up 20% today. BAT, that's the basic attention token. I actually have some of that. There was a website trying to be a competitor to Chrome that would pay you BAT to use it instead of showing you ads. I can't remember what it was, though. Shib is up another 6.9%. It looks like it's at how much? 73.74. And of course, that is after the decimal point and 4 zeros in front of it. Bitcoin's up 2.9%. It's still hanging at that 62,000. So when I went live, it was around the 62,300. It's still around 62,300. Ethereum was up to 7%, 2.7% today. Who else do we have? Oh, they're bouncing around so quick, I can't hold my place. Bitcoin Cash 2.5, Dash 2.5, Litecoin 2.2. Dogecoin is actually down 3.3% right now. They're at 29 cent even for the second. So apparently there is a Dogecoin army and a Shiba army, and they are competing. Dogecoin to $1 and Shib to a penny, I think, is the battle. Oh well, I don't bother with that stuff. All right. Any other questions you guys have? Any other companies you want to look at? Because we can certainly do that. Otherwise, I think I will maybe talk about the Metaverse a little bit. Do you think there will be a big fizzle after the dogfight? Yeah, I do. I think there will be. There's so much volatility. If I can, let's see, there's crypto. All right, here's Dogecoin. Again, this is a daily chart. Now, I did do a little investing in Dogecoin earlier this year, leading up to Elon Musk's SNL, but I haven't touched it since then. There's just a lot of volatility, but it's in there's you could almost say that there's a range right here. Maybe there's a bottom somewhere around 19 cents, and there's a top at about 28 cents. And that was the range it was in for most of this year since SNL. But I think after the end of the year, after Bitcoin does its big run and it lifts all boats with it, all over all other cryptocurrencies with it, I do believe that just like at the beginning of this year, how Dogecoin shot up in value, I think Shib and Doge will keep competing, but once somebody gets to some point, and I don't know what that point is, you'll have this big sell-off and then this bleed out all the way down as people continue to hold it and hope that it'll go back up so they can close out their position in the green and not in the red. But unfortunately, they'll probably be left holding the bag. But I do think there will be, just like Doge did earlier this year, I totally can see that for Doge and Shib later this year. Maybe the end of December, maybe the beginning of January, like most of the crypto market did, how it ran up the end of last year, 2020, and ran up in the beginning of January of 2021. I can totally see that. Even the regular stock market and equities, I can totally see that happening for 2021 into 2022, and then a sell-off. But remember, historically, November, December, January are the best investing months of the year. Probably because, I don't know, people are excited for the holiday season. I don't know. But historically, that's what it looks like. All right. Any other questions? I did want to touch on the metaverse for just a moment. Even though I do have a video out about the metaverse that goes into detail, I did just want to touch on it for a moment because there's a lot of talk about the metaverse now because of Facebook changing their name to Meta to represent all the different tentacles they have. But if you want to hear it, the metaverse to me is, it's like the way that I describe it is a virtual world that is all interconnected, similar in many ways to like Matrix or even Wreck-It Ralph 2, how they go into the internet. That's how I kind of see the metaverse being represented. The metaverse is like our dreams of the future, but unlike dreams, you can actually go visit them, albeit in a virtual sense, but you can go and interact with different things. You can play tennis or golf or play basketball, all in this virtual setting. The metaverse is like the merging of the physical world with extended reality, augmented reality, virtual reality. And I think it will transform the way we work, we play, we communicate, we live. Now, this universe, oh, there goes that timer. I forgot to turn it off. With this metaverse, nobody will own the metaverse in a similar way to nobody owns the internet. And that's because the metaverse is built on the blockchain, just like Bitcoin. And that's one of the biggest differences between the metaverse and the internet of today. So companies or countries won't be able to go in and turn the metaverse off because it's decentralized. Even though companies will try to get their, or they'll try to monopolize. Oh, I just said that wrong word. I said that word wrong. Their own little corners of the metaverse. It's still decentralized. So it's more like you'll own your data instead of Facebook owning your data. But you'll still be paying with your data to have access to these different places. And it could end up being worse than how it is now, with how much data Facebook and Google and Apple and Amazon, all these companies have on us. But that's a different debate and conversation. Now, does the metaverse exist yet? In some ways it does, but there's still a lot of design, coding, and growth ahead for it. The closest we have to the metaverse is a digital games platform called Roblox. You can actually invest in Roblox. And also Fortnite. But Fortnite is owned by a private company that will probably go public sometime soon, I would hope. But they're rapidly transforming Roblox and Fortnite into a virtual world with everything from commerce to actual concerts. Fortnite hosted concerts from some major music players. Now, many in the space say the metaverse economy could be just as big as the physical world, or even bigger, because everything in the physical world could be a part of the metaverse. Think NFTs. They would work perfectly in the metaverse to kind of meld the physical and virtual together. Just think of a famous piece of art, right? And say there were 10 NFTs printed or created for the Mona Lisa. Instead of one person then owning the Mona Lisa, 10 different people could, because of that NFT. And that's a very simplified way to kind of bring NFTs into something that's in the physical world, but it's one idea. So besides Facebook, there's other companies working on the metaverse. One of them is actually Disney. You wouldn't think about it, but Disney's chief technology officer has specifically mentioned the company's long-term vision of building a Disneyland theme park metaverse. He says the theme park of the future may no longer be limited by the physical world thanks to the technology. Imagine sailing the seven seas with pirates, or using the Force in a galaxy far, far away, or fighting Thanos to save the world, all without leaving your living room. That's the metaverse. I'm kind of excited about it, if you can't tell. Now, like I mentioned earlier, Fortnite, it's owned by Epic Games. I should have mentioned that at that point. But that's a company who is really big in the metaverse. And that's a company that I believe will go public one day. And it's a company that will draw a lot of attention when it does. For now, since the metaverse is so new, like Facebook, they're going to hire 10,000 people to work specifically on building their vision of the metaverse. There is an ETF that I actually invest in. It's a round hill investment, and invest in a bunch of metaverse companies. The ticker symbol is Meta, META, just like Facebook's new name. And of course, it's related to tech stocks, so it's going to kind of move along with them. here we go. So recently it's been performing very well. It was recently at a low the beginning of October at $13.75. And let's see what it's run up to so far. And now it's close to all-time highs at 1532. It's 11.4% gain for the month of October. Not too bad. But this is an ETF that I invest in specifically for the Metaverse, because they, obviously it's an ETF, so they've got a bunch of companies, like it's a basket of companies that do different things, different parts of the Metaverse, whether it's, a company like Facebook who's building a social, I don't know, is Facebook building a social credit system? That's a debate to have within the Metaverse. But anyways, that's an ETF that you can use instead of trying to pick random stocks. But I like the idea of the Metaverse. I think it's really cool. Let me know what you think. Do you think it's a good thing, or is it going to cause humanity to be more like what's that Disney movie, Wall-E, where they're all up in a spaceship and all they do is sit in a chair and look at a screen all day? Oh boy. Okay. Well, that's about what I wanted to talk about today. I did say, though, that I wanted to mention something about swing trading that I mentioned, I believe, 2 live streams ago, when we were talking about swing trading and momentum trading and the different strategies. Yesterday I talked about the PEG strategy around investing with and trading around earnings. But there's some ETFs you can use for swing trading too. Let's see here. It's the end of humanity, but it's going to be a lot of fun first. Yeah, I think so. I think you're right. There we go. Yep, I think you're right. I've gotten a few since Facebook had announced and been talking about the Metaverse. My Metaverse video that I've had out, it's been out for maybe 2 months or so. I've gotten a few negative comments that well, not negative for the video, but talking about it's the end of humanity and humanity will suffer more because of it. So we'll have to wait and see. So yeah, let's see. I've been on here, an hour and a half now. Maybe I'll save that swing trading talk for Monday, since it's already getting too late. I don't want you guys sitting here and getting bored with anything that I'm talking about. So I guess I'll save that for Monday's live stream. And it's really just the swing trading that I talked about 2 days ago, but using sectors and thematic ETFs instead of individual stocks, so you can catch the momentum of a sector instead of just the momentum or loss of a single stock. It's just a less risky swing trade option. I don't know. So yeah, I guess I'll wrap it up here. I'll save that little talk for Monday. Unless you have anything else to add, I'll cut it off here for today. Remember, on Sunday afternoons, I will be putting out a video for upcoming catalyst. Oh my goodness, we didn't even get to upcoming catalyst for this week. Yeah, so that Sunday video will definitely be very important. We just got lost in our conversations today, but that's okay. That's what this live stream is for. I don't have to stay on format. You can decide where we go. Okay. Well, thank you everyone for joining me. Look for a video on Saturday. I'm not sure what it's going to be about yet. I'm working on an in-phase video. I've also been working on a part 2 on the Metaverse video. I've been working on a Lucid video and a SoFi video. If there's a video that you would like me to talk about and maybe do an investment thesis on, just let me know in the comments and I'd be happy to look into it. That's how my whole charge point video came up. Somebody asked the question in the comments and I did a deep dive into it and shared my opinion. Whether it's positive, negative, I will always be honest with my opinions on it. Okay. Let's see. You are welcome. You, sir, have a very nice evening too. Thank you all so very much for being here. I love the conversation, and that's what this live stream is for, to answer your questions. So just real quick, if you are watching the recap of this, just make sure to leave a ticker symbol and a question in the comment, and I will go over it on Monday's live stream. So thank you all so very much for watching, and I will see you in the next video.